Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, depth analysis, and real predictions about the world of digital currencies. Today we're going to talk about a development that could significantly change how institutional investors in the United States engage with crypto assets: the launch of the first Solana ETF with staking functionality. According to Bloomberg, the new fund will be called the REX-Osprey Solana Staking ETF, and its official launch is set for Wednesday, July 2nd. The product arrives with the ticker SSK and promises to be a major milestone in the evolution of financial products focused on cryptocurrencies in the largest financial market in the world. Unlike other traditional ETFs, this fund not only offers direct exposure to SOL's price, but also allows investors to earn rewards through staking, a feature previously difficult to access via regulated and institutional channels. This represents a crucial step toward broader and safer adoption of cryptocurrencies within the traditional financial system, especially at a time when the SEC still maintains certain resistance to approving spot ETFs for Bitcoin and Ethereum. The REX-Osprey Solana Staking ETF is innovative precisely because it manages to offer passive income to investors without requiring them to manage their private keys or actively participate in the staking process, something that can be complex and risky for many. Instead, the fund centralizes this operation, ensuring security, transparency, regulatory compliance, while passing on the staking gains to shareholders. This model can attract both beginner investors and large institutions looking to gain exposure to the Solana ecosystem in a practical and efficient way. In addition, the fact that it's traded on an exchange like any other ETF means it can be easily bought and sold during trading hours. With intraday liquidity, and without the need to use decentralized exchanges or self-custody wallets, this ease of access is key to democratizing crypto investment among both institutional and retail audiences in the US, especially in times of growing interest in alternative passive income sources in a low-interest, high-inflation environment. One of the biggest challenges faced by the fund was the hostile regulatory landscape in the United States, particularly under the historically cautious stance of the U.S. Securities and Exchange Commission. The previous SEC leadership, led by Gary Gensler, had been showing resistance toward approving products that allowed staking, arguing that this could constitute unregistered securities offerings or unlicensed brokerage activity. Initially, the agency denied the ETF proposal on the grounds that it could be classified as an investment company, requiring additional regulations. However, the fund managers found an ingenious solution to bypass these barriers, allocating at least 40% of the assets into other Solana-related ETFs, most of which are domiciled outside the US. This structure allowed the fund to fit into existing rules, facilitating its approval by the SEC. For many analysts, including Eric Balhunas, a Bloomberg ETF specialist, this decision shows that there is room for innovation even in a challenging regulatory environment. Furthermore, it sets important precedents for future similar products involving other blockchains that offer staking mechanisms, such as Ethereum, Cardano, and Avalanche. Therefore, the approval of SSK can be seen as a strategic victory for the fintech and crypto sector, which constantly seeks ways to integrate blockchain technology with the traditional financial system in a regulated and sustainable manner. This approval is also interpreted by many as part of a broader effort by the Trump administration, now returning to power after the 2024 elections, to position the United States as a leader in adopting decentralized technologies and cryptocurrencies. According to Balhunas, this is yet another example of how the Trump administration is paving the way for cryptocurrencies 2. Become an integral part of the U.S. economy through public markets, rather than treating them as a pariah asset class that is difficult for traditional investors to access. This shift in narrative is crucial, as it signals that the country is seeking to compete globally with more crypto-friendly jurisdictions like Singapore, Switzerland, and Japan. By allowing funds like SSK to be legally listed and traded, the U.S. is creating a more favorable environment for financial innovation, attracting foreign capital, and encouraging startups in the sector to develop solutions compatible with the local regulatory framework. This could result in a substantial increase in projects built on networks like Solana, which is already known for its speed, low transaction costs, and strong support for decentralized applications. NFTs, and decentralized finance. The inflow of institutional capital via ETFs tends to bring more stability to the market, reduce excessive volatility, and increase investor confidence in the entire sector. Despite the excitement surrounding the ETF launch, the SOL token had a mixed short-term reaction. After an initial rise of 5.3% driven by the news, SOL's price quickly followed the broader downward trend in the crypto market. On Tuesday, the token opened the day with a slight loss of 1.2%, trading at $148.95. Even so, it recorded solid weekly performance, gaining about 7% since the same period last week, indicating that there is a firm support base above $140. However, over the month of June, SOL closed with a small drop of 1.9%, reflecting the typical volatility of the market during that period. Compared to its all-time highs, SOL is still far from fully recovering. Since January, when it surpassed $250, the token has experienced a correction of nearly 50%, fueled mainly by the meme coin frenzy and capital rotation into more speculative assets. Despite this, the ETF launch may represent an important catalyst for the token's recovery, especially if it begins to attract continuous institutional inflows. Technical analysts note that if SOL manages to remain above $140, it could target the resistance zone between $160 and $170 again, which would be a positive step for its medium-term appreciation. Thus, the launch of the SSK ETF is not just a symbolic achievement, but may become a fundamental factor in the next phase of growth for the Solana network and its native token.